Hi, welcome to my channel. Catalina here. If you like content about personal finance, want to hear about my startup journey as a tech entrepreneur, if you're a student loan borrower trying to conquer that dream of home ownership and reaching for it, and you need a support team to be here for you, that is me. You can count on me to be here. Leave your comments, subscribe. This video today is going to talk about state-sponsored tax savings accounts for down payment assistance. I know that's a huge mouthful, but it's basically, the way that the government has created retirement accounts or even healthcare savings account. It's the same exact thing, but for down payments, which is really, really exciting because why are we paying taxes on money we're trying to save up for a down payment? I mean, so many people of our generation already have student loan debt to deal with, all these types of financial burdens. We can't even save freaking for $500 emergency on average. Thank you, governments, state governments, for helping us with tax advantage savings accounts. So this video, I'm going to go over what they mean, what are some of the benefits, what states already have them, what states are proposing them. So you can just have the down low if you're looking to start one. You can start one at your local bank, okay? So I will leave a link below for additional information on the programs so you can learn more about them. So basically, they're basically at existing banks, and with rising costs, state governments have realized that young people are experiencing lots of pressure. We're like 5 years behind our parents' generation buying a house. So one of the first states activated, I believe, was the state of Colorado. So in the state of Colorado, they allow contributions of up to contributions individually of $14,000 with the deposits are taxed, but interest earnings are not taxed, okay? In the state of Iowa, you have a 10-year deadline to use it. Well, you know what I'm going to do? Let me go over the states that are offering some type of program so you know about them if you are in those states. The state of Colorado, the state of Iowa, the state of Minnesota, the state of Mississippi. Wow, when did Mississippi become so progressive? The state of Montana, the state of Oregon, and the state of Virginia. So if you live in any of those states, want to buy in those states, definitely click the link below so you can learn all the details. I'm just going to go over a few of the details. States like Colorado, for example, don't have deadlines on when you have to use it, whereas the state of Iowa, you have 10 years to use it. Some states don't tax the deposits and don't tax the interest. Others don't tax the deposit. Don't tax the deposit, but don't tax the interest, right? So every state has different rules, right? And there's also like maximums. Some states like Mississippi has no maximum. The state of Montana has no maximum, no maximum, as well as no deadline to use it. But they do have max amounts you can that are tax deductible, right? And then, of course, if you withdraw them not for a down payment, then there are penalties, right? Penalties in terms of you have to pay the taxes back. The same thing with the Roth IRA, for example. They may not tax the growth, but if you don't use that money for retirement, then the government's going to tax it. It's a very, very similar concept. Oregon, some states have super generous benefits like Mississippi and Montana. There is no limit to how much you can contribute. Other states there are. So click the link below if you're in any of those states I mentioned before: Colorado, Iowa, Minnesota. I'm looking at the screen, so excuse my eyes. Mississippi, Montana, Oregon, and Virginia. States in which the legislation is being proposed but have not passed include Alabama, Louisiana, Massachusetts, Michigan, which is exciting, that's my state, Missouri, Nebraska, New Jersey, New York, and Pennsylvania, okay? Some states, it's expired and has to be reintroduced. So in those states I just read off, it's been mentioned, it has not yet passed, okay? But I just want to mention it because the benefits are quite huge. If you live in any of the states I mentioned, go into the bank, open one of these accounts. You could start potentially saving not just on the deposits from a tax perspective, but also on the earnings of them. And this is an account that if you take 3 years to save for down payment, then there's great benefits you can get in those 3 years. Some people, some people it takes them 6 months, some people it takes 6 years, right? So whatever it is, the steps to improving your total and overall preparation for home buying take that time to do what you need to so you're not overcommitting budget-wise. There's many steps to prepare to be a homeowner. I will go over a few of these in like the steps to prepare for home ownership in another video. But I hope you enjoyed that. If you like my content, please subscribe. I will be sharing everything from educational content to my journey as an entrepreneurial startup at LoanSense, as well as contents that touch my heart and relate to personal finance, right? So if you have student loan debt, by the way, I want to mention this, and it's really hurting you or impeding you from saving for that dream goal of a house, don't let it stop you. Let our advisors get you a plan. I'm going to leave the link below as well so we can help you do that. We know all the ins and outs. We understand the debt to income. We understand the tax implications. We understand the tax loopholes. All these things that could help you possibly qualify at a much quicker pace and stop paying that rent and instead start building equity. If that sounds good to you, visit us. I will leave a link below at myloansense.com. We also have a handy dandy affordability tool. I will include the link below. Subscribe to our channel, please. Thank you. Until next video, ta-ta.